This is as you can see, it's a potentially very big topic. I'm going to try to condense it in a fairly short amount of time. The first thing to talk about is the power elite, and those of us who are interested in power elite analysis and its ramifications, which are fascinating, are always accused of being conspiracy theorists. And the thing about the analysis is there's no theory involved in this thing, I mean, except common sense. It's not that somehow we've got a theory and impose it on the fact. These analyses pop up from the fact. They stare out at you. You begin to see connections. For example, suppose you look in the paper, you open up the New York Times or whatever, you see that Congress has just passed a steel import quota, or has increased the steel import quota, or has passed a new automobile import quota. And supposing you think to yourself, do you think to yourself, well, gee, it looks like a few intellectuals and congressmen suddenly got into their heads to increase the import quota? Or do you say to yourself, I guess the oil interests or the steel interests or the automobile interests have been lobbying for increased import quota? Which of the two do you say? If you say to yourself, if somebody says, I guess if in the case of automobile import quota, the automobile industry has been lobbying for it, if somebody is saying, no, you're a conspiracy theorist. Clearly not. You have to be sort of a nut to think that an import quota has been established or a tariff has been increased because of some abstract intellectual interest without the drive for it of the particular industry at stake. Now, the thing is, that doesn't conclusively prove it. First you have the hypothesis. The hypothesis is that the steel import quota has increased yesterday, let's say. The hypothesis is it looks like the steel industry lobbied for it, and then you find out. You look into the situation, you find out 9 times out of 10 or 99 times out of 100, yes, indeed, they did lobby for it, and that's it. So that's how you get the hypothesis, and then you look for the evidence, which usually is fairly clear. So this is clear on that kind of a level of a tariff or import quota or a lobby for some airport, and you find out who did it, who gets the contract, things of that sort. It's fairly obvious that economic interests are pushing for it. Where it gets controversial, so to speak, is when it gets a little bit more abstract, a little bit more systemic. Lobbying, for example, for some kind of measure which is supposed to be just for the general interest, like a central bank, we're talking about tonight, or some kind of regulatory commission or a war. In that sort of situation, it becomes somehow controversial to look into the possible economic interests which have been lobbying for it. And if you start looking around for the evidence, you usually find it, but usually you don't look for evidence. The problem is historians mostly don't look for evidence on a more abstract level. And particularly with financial groups involved. The Chicago economists are pretty good when they're dealing with specific industries, like specific regulatory commissions, say the ICC and the railroads. It's pretty clear the Interstate Commerce Commission was lobbied for by the railroad interests. It was not put in by intellectuals and abstract leftists or something. It was put in by the railroads themselves to cartelize the industry. The problem with the Chicago school is they don't go far enough and look for the financial interests underlying the various industries. There are financial interest investment bankers and commercial bankers which cut across narrow industrial lines. To get more specific, because this is an empirical question, to get more specific, in the late 19th century, various groups of businessmen tried to cartelize their industry, cartelize the industry. First in the railroads in the 1860s and 70s, and then in the manufacturing in the 1890s. And they tried, the theory was, you have a cartel, all the firms, to cut production, raise prices, and thereby increase profits. This was the attempt. This was the theory. Either first by cartels, getting together and say, look, we'll raise the prices, or raise the railroad rates, or whatever. But in order to do that, you have to cut production. You have to cut railroad shipments with the railroads. That's very difficult to do. To arrange a quota kind of system, you cut production. Anyway, they tried to do that, and it never worked. It was always a flopperoo. When it didn't work, the economic theory shows us it will never work. But for two reasons. One, because internal pressure, because different firms have temptation to cheat on the cartel, to undercut the cartel buddies and pick up more sales, or new firms come in, they see this industry getting high profits, they cut in, they establish a new plant with more modern equipment, and they're permanently, and they smash the cartel, and you're stuck forever with a newer, dangerous competitor. So for those reasons, both first in the railroads and then in manufacturing, cartels and mergers didn't work. There was a great merger boom from 1898 to 1902. 200 industries or so tried to form one monopoly company in each industry in order to cut production, raise prices. Almost all of them were flopperoos. They totally collapsed. So with that knowledge, various would-be cartelists decided to turn to the government to do the cartelization for them. This is the essence of the so-called progressive era, which lasted approximately officially from 1900 to 1918, or actually from then on. I mean, we're still living in it, basically. And so the theory was we get together, we get the government, either state or urban or state or federal, to do the cartelizing for us. The model of that was Bismarck and Prussia and Germany in the late 19th century. You force all the firms into one cartel, you force them to go along with cutting production and raising prices. With the government as sort of the big brother, sort of running everything and arbitrating prices and wages and having high tariffs to keep out competitive imports. That was the basic schema. And around 1900, several financial groups began to form around banks, around investment banks and commercial banks. And particularly, since from the Panic of 1873 on, J.P. Morgan and Company was a major investment banker, first in railroads and then in manufacturing later on. Morgan started from the very beginning with the theory of cartelizing, first of all, organizing railroad cartels. They didn't work. And then Morgan turns to the federal government to enforce it for them in the Interstate Commerce Commission. And then in manufacturing in the late 19th century, in the 1890s. So about 1900, what you've got is two competing financial groups, more or less. You have the Morgans on the one hand, J.P. Morgan and Company, and all their vast network of corporations which they controlled, on the one hand, versus another combine consisting of three groups. The Rockefeller Empire, starting, of course, with Standard Oil and moving outward into banking and finance, etc., allied with Edward Harriman, who was a big brilliant railroad financier and speculator who took over a lot of railroads under the nose of Morgan, so Morgan hated Harriman. And Harriman's expanding out into finance also, plus Kuhn Loeb, a German Jewish investment banking house in New York, which really anticipated Morgan and going to manufacturing. So the three of them formed an alliance. Basically, what you've got from that 1900 on is the Rockefeller, Kuhn Loeb, Harriman alliance versus the Morgans. This is the big Titanic struggle, which helps explain American politics from 1900 through World War II. It's more or less the paradigm. Much more, by the way, explanatory than the Republicans versus Democrats and who happens to run each year and that sort of stuff, which is more or less a puppet show for the public. Now, one of the things that comes into this picture, I think one of the keys to getting at this kind of analysis is, if you see you notice what somebody's doing in government, okay, some president or cabinet minister or secretary of the Treasury or whatever, or Federal Reserve chairman, and you notice what they're doing. Most historians, what they say is, so-and-so entered government, whatever, in 1900, 1940, whatever. He did such and such for about 4 years or 8 years, then he disappears. In other words, it's as if the government official dropped out of heaven or somewhere and did things and then left and then disappears from the scene. With that kind of analysis, it seems to me the competing view of this, I think this is the orthodox view. If you read about John Foster Dulles or whoever you're talking about, Grover Cleveland or whatever, they do things in government, they leave, they come into the picture, they do things in government, they leave, and that's it. And nobody ever connects this up with what they did before or after. What would they do? Did they have a life before they entered government and after they left government? If you read the average Orthodox historian, they don't have a life. They just pop up sort of, let's say, from Mount Olympus, and they do things and disappear. Once you look at all you have to do is to look at the situation. What did these guys do before they were president or secretary of treasury or whatever, and what did they do afterward? And once you bring that into the picture, you get a whole, if it's so-called conspiracy analysis pops out, almost leaps out at you. It becomes almost evident. This is one example. I can give hundreds of examples in American history, but one of the examples is Grover Cleveland, I actually happen to like. Certainly a better president than anybody who succeeded him. There's no doubt about that. But Grover Cleveland was in favor of laissez-faire throughout. He was very consistent, except on the railroad question. On the railroad question, he was in favor of the Interstate Commerce Commission that passed in his administration, which of course set up the first regulatory commission for railroads. If you look at it from an abstract point of view, you might say, well, how is it that Grover Cleveland was great at everything except he somehow waffled on railroads? Well, it might be connected to the fact, if you look at what Cleveland did before he became a president, between his two terms and after he left, who was he? I mean, did he have a life before that, in addition to being a nice guy named Grover Cleveland? He indeed was a top railroad attorney in Buffalo. He was connected with the Morgan-dominated New York Central Railroad, and his big buddy and law partner, before and after he was president, was none other than Francis Lynn Stetson, who was the top personal attorney for J.P. Morgan. Once you look at that, and once you look at the fact also that Morgan was the major driver for the Interstate Commerce Commission, major person pushing it, then everything begins to clarify, right? It's a light up. Or the fact that John Foster Dulles and his brother Allen, who ran American foreign policy for about, 40 years, at least it seemed like it, but less than that, for say 20 years, who were the Dulles brothers? Why did the Dulles brothers run all American foreign policy? Is it connected with the fact they were both top before that, or top lawyers for Standard Oil in New Jersey and the Rockefeller Oil Empire? Do their policies have some connection with that fact? I think they did. So that opens up the whole interconnection of the power elite. Okay, if we look at that picture, and look at the fact that the various presidents and so forth were connected with either the Morgans or the opposition of the Rockefellers during this whole period, and as I say, it clarifies an enormous amount about American political history. Particularly because, and by the way, it's even more, I can't go into this, but what happens is, this is a tragic event. To me, the most tragic single event in American history is in 1896, when the Democratic Party, which had been the party of laissez-faire, an ideologically committed party of laissez-faire, is captured by the extreme status under William Jennings Bryan, and the whole thing then, the whole Democratic Party as a laissez-faire party disappears. In those days, political parties were very different from now. It's totally different. It must have been great. For those of us who were political junkies, it must have been magnificent. Because the political parties were strongly ideological. They're not totally consistent, but remarkably consistent ideologically. They were organized around a certain key values and policies. So their members were very loyal. Their members, when they socialized their members, the general public got interested. Everybody was either a Democrat or Republican. There were no independent voters. Those are things independent. You were committed to that. You grew up as a Democrat or Republican, and you were loyal to it. And the reason was they had an ideology. It wasn't just scrambling for office or looking good on television. So therefore, and if your candidate waffles, if you're a Democrat or Republican, your candidate waffles on principle, you don't vote for him. You get very TO'd at this, and you don't vote until your party loses. So as a result, the candidates were more militant, more ideological during the campaigns than they were the rest of the time. It was totally opposite from the present situation. So this was this is what happened before 1896. After 1896, when the laissez-faire lost its political voice, everybody forgets. Most of the public have a high amnesia quotient politically, and so people forget. And then this left a vacuum. The fact that then on the party system from 1896 on was more or less like it is now. In other words, non-ideological, centrist, semi-statist, and all that. Because of that, this means the parties are no longer important, and this left a vacuum, a political power vacuum for technocrats, bureaucrats, and big business types to take over, for the power elite to move in, which they couldn't do as well before that. So what you've got is, all of these guys wanted cartelization by 1900, not just the Morgans, but also the Rockefeller-Harriman group. None of them they all have now committed to this concept. The problem is, how do you put this across to the average voter? The average voter, after all, the American voter has a tradition in the United States of anti-monopoly tradition, free market, pro-competition, anti-monopoly. Many state governments, for example, had in their constitution, an original state government had in the constitution outlawing monopoly. By outlawing monopoly, they did not mean outlawing big business or, having a falling demand curve. What they meant was grants of monopoly privilege by the government, outlawing any grants of monopoly exclusive privilege to sell or produce by the government. So America was raised in an anti-monopoly tradition, as well as an anti-statist tradition. How did they get away? How did the Morgan types get away with this then? How did they put across cartelization of the system? And the way they put it across was to form an alliance with the opinion-molding groups in class in society, the opinion-molding class in society of intellectuals, academics, writers, journalists, media, what we now call the media. They formed an alliance with them to put this across. It so happened that by 1900, the intellectuals and the media, etc., were ripe for this kind of alliance. For one thing, there were a lot more of them. In other words, technocrats, a tremendous technocratic explosion in the late 19th century. Engineering schools, PhDs came in for the first time, and engineering schools and social workers became a profession. All these shrinks, physicians, all these people expanded their base, and they all wanted to restrict the supply of their profession. Everybody wanted to keep the other guys out. Have a licensing, and all the rest of it. So they wanted licensing. They also wanted to be able to staff the new interventionist society, the new order. They want to have jobs in the new order, which, for one thing, under a free market capitalism, many intellectuals don't get the jobs to which they think they should become accustomed. There's not much. There's not much. How much of a role is there for historians and economists and all that? And one of the problems with Austrian economics in general, and the economics profession, is to get to the nitty-gritty, is what jobs can we offer? What jobs can the Austrian world offer economics? Well, not much. Teaching, of course, but you can't offer much in any place else. You can't offer forecasting, big forecasting jobs in government, or forecasting models and all the rest of it. We consider most of that a lot of nonsense. So it restricts the opportunities open for job opportunities for economists. There's no question about that. So, and these people saw that. They saw, hey, this is great. Government can offer them. They can offer them jobs economists in particular, of course. They can offer them jobs apologizing for the new order, the new collective or interventionist order, and jobs in the order, planning it, or historians writing peons to the presidents and things like that. So there's lots of jobs for intellectuals in the new interventionist order, which does not exist in the free market. Also, many of these people, as is well known, before we could get PhDs here, there were PhDs in Germany. They went to Germany to get PhDs, the first academics in the late 19th century. They were all imbued with the spirit of the new interventionism, the new organic statism, transcending the alleged evils of laissez-faire on the one hand and proletarian Marxism on the other. These people, they were statists, they didn't like proletarians particularly anyway. They didn't like trouble with Marxism and make sure you have to rub elbows with a lot of sort of grubby types. This gives you a statism of a higher level, monarchical statism, big business statism, and the rest of it. So now we had the alliance. There was now right for an alliance between these two new social groups, or the big business groups on one hand, and also the new intellectuals, technocrats on the other. And you read some of the stuff. I recommend, for example, the great book was written by James Gilbert in the late 1960s called Designing the Industrial State. If you want to get a view of the intellectuals of the time, it's a wonderful, acidic, bitter book about these people. But he calls collectivist intellectuals and the whole mindset. And one typical thing is, it's not directly related to the Fed, but indirectly, Charles Steinmetz, who's a brilliant inventor, was a socialist. He wrote a book about the importance of world socialism. I forget the title. Around this period, about 1905 or something like that. And the thing about Steinmetz, he was the big philosopher, inventor, and theoretician for General Electric, which was a big Morgan company. And basically what he wanted was General Electric socialism. He wanted a world government run by General Electric with him as the philosopher king, the philosopher dash inventor. So essentially Steinmetz socialism. So that's he to me symbolizes, well, two symbols for this new order, so to speak. One is Steinmetz, and two is the New Republic magazine, which is still unfortunately with us, which was founded in 1914 as a big left liberal, collectivist kind of intellectual magazine. And the interesting thing is who founded it. It was founded by a Morgan partner, Willard Straight, and his wife was a Morgan heiress, a Whitney heiress. So in other words, to me, this also symbolizes big business dash socialist intellectual alliance. Morgan, as a beautiful symbol of a Morgan dash socialist intellectual order, so to speak. At any rate, the usual view, to get to the Federal Reserve System, the Federal Reserve System was part of the whole progressive movement. It's not just isolated. It has to be considered in context. Just as big business was reaching for trying to get a Federal Trade Commission Act, which they did, to cartelize industry in general, to do for, the famous phrase at that point was, we need something to do, an organization to do for general industry, or general business, what the Interstate Commerce Commission did for, not two, but for railroads, and what the Labor Department does for unions, and what the Agriculture Department does for farmers and stuff. In other words, to help them out, quote unquote. So that was, and the Federal Reserve System was conceived of by big bankers to cartelize the banking system. Yeah, America's banking system. American banking system had gotten a little too competitive by 1900. What happened is during the Civil War, the banking system was changed from a more or less free market to more or less free banking system. From 1840s on, after Jackson had destroyed the first bank, more or less free banking system until the Civil War, and the Republican Party, which was the big statist party at that time, used the Civil War to push through their entire economic program, including high tariffs, huge subsidies to railroads and things like that, and part of which was destroying the competitive banking system, replacing it with a statist banking, a centralized banking system called the National Banking Act, National Banking System, which monopolized the issue of banknotes in national banks instead of state banks. And so a semi-centralized, sort of a halfway house to a central bank. By the 1890s, the Wall Street, and especially Wall Street banks running it, with a pyramiding of credit on top of several Wall Street banks. By the 1890s, they felt that the control was slipping away from them. There was too many upstart banks in St. Louis and Chicago and places like that. And also, they were griping about the fact there was so-called inelasticity of the money supply. In other words, inelasticity is a code word for not enough money being poured out. And they couldn't create enough money especially during recessions. In recessions, they have to contract. They'd expand during creating a boom period. And then when things would get too hairy, they have to contract if the banks might go under. They needed a central bank imported from Europe. They needed a lender of last resort to bail the banks out, and to centralize reserves, they could all expand together, and to expand even during recession. So that was the basic. In other words, to cartelize the banking system. It was the banking analog to attempt a government cartel in other areas. And in this particular banking area, the two big clashing elite powers, the Morgans on the one hand, the Harriman, Rockefeller, Kuhn, Combine on the other, were in agreement. There was no problem. They both agreed that we need a central bank. Okay. So the question was how to maneuver this. In other words, if they were in agreement, how to get the dumb masses to go along with it. Yeah, this is the basic approach. Now, the orthodox view is that the drive for a Federal Reserve started after the panic of 1907. People got scared, or the bankers got scared, decided they needed a central bank. Started long before that. Started about 1896. What the Morgans wanted, and the Morgans essentially wanted the following. They were afraid of Bryan because Bryan was in favor of sort of government inflation, not bank credit inflation. So they didn't like Bryan at all. The Morgans had to leave the Democratic Party, and they made an alliance with the Rockefellers who were running the Republican Party at the time. And what the Morgans wanted, basically, was continuing a gold standard. They wanted a gold standard because they wanted an illusion of soundness, but they wanted expanding bank credit on top of the gold standard and a central bank also. In other words, they wanted basically a Federal Reserve System. And the idea was because the previous system was not elastic enough, quote unquote. So that was so first they got the gold standard through by 1890s from McKinley's victory and also in 1900. But by 1897 they decided they needed to stimulate a phony grassroots movement. In other words, how do you get a Federal Reserve System? You can't have Morgan issuing a pronouncement. That's not going to work. Most of the public, for some obscure reason, suspicious of Wall Street and Morgan. They were edgy. So they had to stimulate a phony grassroots movement. And they searched for the Middle West. The Middle West in those days was the heartland. That was good old boys from the Middle West. So they set up a phony Indianapolis Monetary Convention, the first session in 1896. There's a great book on this by the New Left historian Jim Livingston called The Origins of the Federal Reserve System, which goes into this at some wonderful lengths about how exactly this thing worked. So they pretend there's only small businessmen in Indianapolis and Indiana and all across the country. It's a heartland. It has nothing to do with Wall Street banks. It's only a heartland. However, if you look into who actually was running it, it was the Morgan people. It was Morgan from beginning to end. So they have an Indianapolis Monetary Convention in 1896, another one in 97. They have they pioneer what we can call a phony questionnaire technique, which is very effective from public relations point of view. They send out questionnaires to various bankers and businessmen all over the country with sort of loaded questions, so we'll get the right answers, and then they get the answers back and say, hey, 2,000 businessmen want, central bank or whatever. So they called for, in 1897, they called for a gold standard, McKinley and whatever, and a central banking system to provide an elastic money supply. So it starts with that. It starts in 1897. It starts with, and then the various two secretaries of the Treasury. The first one under McKinley was a Rockefeller. McKinley was a Rockefeller person. I think number one. McKinley was bailed out of bankruptcy when he was governor of Ohio by the Rockefeller Combine. So he was beholden to the Rockefeller people. And McKinley's Secretary of the Treasury, Lyman J. Gage, was a Rockefeller Chicago banker. First National Bank of Chicago, which basically was a Rockefeller bank. And so he tried to he was promoting the idea of a central bank. He was pushing for that. And after Teddy Roosevelt got in to a lone nut assassin, one of the many lone nuts in American history, popping off McKinley. So Teddy Roosevelt was a Morgan person from his shoelaces up, suddenly becomes president. He puts in a Morgan person named Leslie Shaw from Iowa, and he's trying to act as a central bank, have the Treasury act as a central bank. And it didn't seem to work too well. He finally had to stop. So at that point, when it stopped working, when it was obvious the Treasury couldn't function as a central bank, you have to have a central bank. At that point, they got very serious by 1906 and put on the big push for a Fed or a central bank. Interestingly enough, they started the idea of a parity, 2-2-1 parity system. New York Chamber of Commerce starts the final drive for a central bank starts with Jacob Schiff, the powerful head of King Loeb Company. Makes a speech before the New York Chamber of Commerce urging a central bank, calling for more elastic money and all that. And they set up a committee to study it. The committee is headed by Frank Vanderlip, who's Mr. Rockefeller in banking sphere, the vice president of the National City Bank of New York, which was a total Rockefeller-controlled bank. And he sets up a committee, or I think they call it a commission, of 5 people to try to study the banking problem. It's always study. I mean, the solution is always written in advance, more or less. If you have 5 experts get together and think about something for a couple of weeks, and you come up with, by God, they come up with a central bank idea. So the parity was this. It's sort of like the Washington Armament Conference in the 1920s. Two Rockefeller people, 2 Morgan people, and 1 Kuhn Loeb person. 2-2-1. So the committee was supposed to be Vanderlip for the Rockefellers, George Baker, who's Morgan's closest ally for practically boyhood of the First National Bank in New York, Jacob Schiff, and Lyman Gage, the Secretary of Treasury, and J.P. Morgan himself. But they couldn't make it. So we wind up with Vanderlip, plus 4 other guys who constituted 2 Morgan people, 2 Rockefeller people, and 1 Kuhn Loeb person. And they come out with a report calling for a central bank once again. In the meantime, as the American Bankers Association now they have to convince the American Bankers Association. Not that easy because the small bankers were suspicious. So you start with the American Bankers Association set up their own committee with staff of Morgan and Rockefeller people, and they come up with their report. And they meet together with the New York State Chamber of Commerce group, all the same people, all buddies, and they come up 10 independent experts at this time. They come up with a post-central bank report. So and then comes the Panic of 1907, which is more of a push to the whole thing. But it really starts by the end of 1906. The whole thing is really been pretty well set. At any rate, this particular outfit, which we celebrate here this weekend, is the site of the famous secret conference in December 1910, where the five guys got together and write the Federal Reserve Act, not just think about it. Just so that they finally get to that stage. And these are, let's see what these should be enshrined in song and story, as they are. These are, first of all, it was organized by by Nelson W. Aldrich, the senator from Rhode Island, majority leader. And he said he charters the car. Of course, there was no planes around; they couldn't fly down here. It was a car chartered in Newark. They stationed here from New York, and everybody had a fake name because the reporters were very interested in this whole thing. They were trying to throw the reporters off. They all signed themselves some other Professor Jones or something like that. And Aldrich said, "We're just going down to Jekyll Island for a duck hunting expedition." This was a big duck hunting place. So apparently, one reporter actually found out about the purpose of this, and for some reason, somehow, Aldrich was able to silence him one way or the other. I mean, that hasn't been explored yet. Keep them quiet. So the guys who went down to this thing, and presumably the headquarters were provided by J.P. Morgan, who was one of the founders of Jekyll Island Club. Aldrich, who was Aldrich? Okay, again, you look at who the guy is in real life and what he is in politics. In politics, he was the majority leader of the Senate for many years. He was a Republican wholesale grocer from Rhode Island, and started as fairly modestly wealthy, and leaves the Senate a multi-millionaire, even though his salary is fairly low. It's never been really investigated how he came about this. Anyway, the interesting thing about Aldrich was that his daughter, Abby, married John D. Rockefeller Jr. It's always good to have your daughter marry a Rockefeller. Okay? So he is Mr. Rockefeller from then on in the Senate. And so he's organizing the thing. He had a National Monetary Commission, which he put through Congress. You have scholarly studies showing why you have to have a Federal Reserve System. That's sort of set the stage, setting the stage for all this. He brings with him the following people. There's 2 Morgans, 2 Rockefellers, 1 Kuhn Lower. This is 4 years after the original paradigm. Aldrich, Rockefeller person. Another Rockefeller person is Frank Vanderlip, I already mentioned, Vice President of National City Bank. And two top Morgan people, Henry P. Davison, partner of J.P. Morgan & Company, the top Morgan partner. So like Secretary of State of the Morgan World Empire. See, some of the partners are interested mostly in either politics or merging. Others are regular bankers, and Davison was the top external bankers. And Charles Norton, president of the First National Bank in New York, which is the Morgan Baker Bank. Those are the 2 Morgan people. And Paul Warburg, Kuhn Lower partner, the 5th guy. Paul Warburg was brought over by Jacob Schiff about 1897 as partner from Germany. They were all related. I mean, Warburg and Schiff were related in very obscure, incestuous way. They were all like everybody's each other's father or something like that, a cousin. It's very complicated. Anyway, they're all closely related. And Warburg comes over, apparently getting a salary of about $500,000 a year, which in those days was like $5 million or $6 million a year now, precisely for the purpose of bringing us a central bank, bringing us the joys of the German Reichsbank. I don't think he did anything else. I think it was his function. So he was there. He had given a famous speech in 1907 in favor of a central bank. So these are the 5 guys. And also was an economist. They have the 5 guys plus a technocrat. A Harvard economist actually liked the specific clauses. And David Fan asked me earlier who he was. I now know his name, A. Piatt Andrew, Harvard economist and big fan of the Federal Reserve System. So these six people sat there for a week and drafted the whole legislation. And there's been everybody's trying to take credit for the Federal Reserve System. So everybody writes his memoirs and claim I really wrote it and he really wrote it. And I think it's been conclusively proven by Milton Friedman and others that this is the same stuff. It's really virtually the same. What was passed 3 years later is virtually what they wrote here in Jekyll Island. Almost no changes. The reason they had to wait 3 years is the Democrats won the election in 1910 in Congress. And, of course, Wilson won in 1912, so they had to retool it. They couldn't have Aldrich's red name on the bill because he was a Republican, a big Republican. They had to have a Democrat. They had to suck the Democrats into this, too. They had some of the glass. They had to resync it, retool it, I should say. And also they had to propagandize the masses about why this is really a grassroots movement. And J. Lawrence Lachlan, the Chicago economist who was a big fan of the Federal Reserve, was appointed or hired to set up a grassroots movement in Chicago. Once again, this is the Midwest, therefore heartland types free of any Wall Street taint, allegedly, he and his assistant, H. Parker Willis, actually they're pretty good guys. I mean, right now, relative to what's going on now, they were great, but of course they were lousy compared to what was going on then. They were pro-Federal Reserve people. And so they set up this, I think it's called the Citizens Committee for Banking Reform, something like that, in Chicago, writing pamphlets and tracts and propaganda why we should have a Federal Reserve System. And allegedly with no connection with Wall Street. Actually, Willis's memoirs later on said this whole thing was a front for New York bankers. He admitted it. He turned against the Morgans anyway by that time, so he was fairly bitter about the stuff he'd been used. So at any rate, so they set up a phony grassroots thing. They converted businessmen, they converted the small bankers of the American Bankers Association, and then they're ready for the big push in Congress. By late 1913, it's almost unanimous. I mean, almost they get everybody in this thing. They run through, and that was it. Okay, so the Morgans, the Rockefellers, and the Kuhn-Loeb forces win. Then this question of what do you... Okay, now, as many of the cartels said, it's not enough to pass the legislation. You have to have sound people on the board. Who's running it? So then you have jockeying for power. Who's going to run this thing? And, of course, we generally accepted the Morgans were going to run it. And, indeed, they did. The Federal Reserve Board in Washington was largely Morgan. They had other influences there, too. There were about 7 people or whatever. There was a coalition. The Rockefeller guy was Frederick Delano. That's something, remember, for a few minutes later. You have to realize about the Roosevelt family. It's very important for 20th century American history. The Theodore Roosevelt branch of the Roosevelt family, it's the Oyster Bay, Manhattan branch, has always been Morgan connected. I mean since almost his birth. I mean, Teddy Roosevelt, he went to college in Harvard, immediately married Alice Lee, was a Boston Brahmin type. The Boston Brahmins were all Morgan oriented. So he was and his mentor, beloved political mentor, was Henry Cabot Lodge, was virtually Morgan tool. So you have the Theodore Roosevelt wing of the family has always been Morgan. On the other hand, the Franklin Roosevelt wing, the beloved Franklin Roosevelt wing, the Hyde Park Roosevelts, were allied to their neighbors in the Hudson Valley, namely the Astors and the Harrimans. The Harrimans, the operative people here. The Harrimans are a very underplayed group in American 20th century history. They've kept a low profile for some reason, because even though Averill was governor and ambassador to Russia and everything else. He was a key figure, extremely wealthy, of course, in the Harriman fortune. Remember the Harriman Rockefeller Kuhn-Loeb connection. So, at any rate, so we have Uncle Franklin Roosevelt's uncle, Frederick Delano, was also a member of the Federal Reserve Board. He was connected with a Rockefeller railroad, I think Chicago Wabash and Company Railroad, something like that. So, at any rate, it was largely Morgan, but it wasn't solidly Morgan, the Federal Reserve Board. But in those days, the power was in the hands of the governor of the Federal Reserve Bank of New York. And that was the key. That was the guy engaged in open market operations and everything else. And that was granted to a top Morgan person, Benjamin Strong, Milton Friedman's favorite banker. Benjamin Strong was asked to have the post of governor of the Federal Reserve Bank of New York. He said he doesn't really want it because he thinks it won't be powerful enough. He was persuaded to take the job by his two closest friends in the world, Henry P. Davison, Morgan partner, and his neighbor got him into the whole thing. Strong was vice president of Bankers Trust Company, which was set up by the Morgans to engage in the trust business. And his mentor and his closest buddy in the world was Henry P. Davison, Morgan partner. His other 2 closest friends were Dwight Morrow, Morgan partner, and I think Thomas Lamont, Morgan partner. Anyway, they worked on it. They said, "Don't worry, you'll have the power. Don't worry about it." And indeed he did. And so he gets in and he follows a policy from then on of a totally Morgan policy until he died in 1928. In other words, a policy of expanding the power, tremendous power of the Fed, centralizing the banking system, expanding, inflating the money supply. First to finance the war effort, which came along. First to finance exports to the Allies. When the World War I started in August 1914, Harold P. Davison, Morgan partner, hops the first boat to London. He couldn't take the Concorde, but he hopped the first boat to London. He makes an agreement with the Bank of England and the English government, which they were very closely connected. Morgan Grenfell and Company is one of the top English banks, and so for many years, and so they make an agreement with the British and French governments as follows: for the duration of the war, the Morgan Bank gets the fiscal agents of the Bank of England, gets the monopoly underwriting of all British and French bonds in the United States, and the monopoly purchasing of all British and French ammunition, food, everything else. In other words, all supplies from the United States is purchased by J.P. Morgan and Company. So they fed the contracts of their own Morgan, mostly their own Morgan industry, their own companies like U.S. Steel, International Harvester, and General Electric got the lion's share of all this stuff. So at any rate, so strong is first increasing the money supply, first to finance the foreign loans, the foreign exports, and then to get us into the war and finance the war effort. After World War I, we have a situation, a very peculiar situation, which I won't go to at great length, but anyway, we have a situation where the Morgans are committed to the phony gold standard, which the British engineered in 1925-26, where the British had a peculiar situation. The British situation was the pound had been depreciated. The pound was always $4.86. That always had been the pound. That was it. That was the God-given pound at $4.86. The pound depreciated during the war because of inflation. I mean, we inflated, but the Western Allies inflated even more. Like the Germans also inflated even more because they were in the war longer, for one thing. They were in the war for 4 years, and we were in the war for only a year and a half. So at any rate, the pound had depreciated down to $3.20 by 1920. And the British wanted to go back to the gold standard. They didn't want to fiat money, okay, but they insisted on going back at $4.86. We can't go back at $3.20. That's going to make us a lesser power. We have to reestablish our great British. London is the great financial center of the world, and to do that, we have to go back at $4.86. Also, the bondholders were pushing for it too, of course. So they're committed to two things: one, to going back to gold, but going back at $4.86, and three, they're committed to in order to make this viable, they would have had to deflate a lot. In other words, at $4.86, it means that British goods were unsaleable abroad because they're too highly priced. They would have had to deflate. They would have had a tremendous contractionary, deflationary, which I think is great. I love deflation. The point is, they didn't love it. They'd now been converted to an inflationary cheap money policy. They want to continue a policy of inflation and cheap money and go back to $4.86. It's totally insane axioms. They started with several mutually contradictory and crazy axioms, and within that they maneuvered brilliantly within it. They maneuvered everybody else. They forced every country to go back and had overvalued currency and all the rest of it. They also went back to a phony gold standard. This is the ancestor of Bretton Woods. They went back they didn't go back to a gold coin standard, but only a gold bullion standard. So you could only get like bars worth $10,000. You couldn't get coins, so the average person couldn't get it. Plus, if you're a British citizen, you couldn't even get gold bullion. You had to be a foreign citizen getting only bullion, so it wasn't really redeemable. It was a phony redeemability, very much like Bretton Woods, really the ancestor of Bretton Woods. And they forced all the other countries to go back at higher currency. But the United States, what did they do with us? They couldn't force us. They didn't have any power over us as they had through the League of Nations over Europe. So they induced, because of the Morgan connection, they induced Strong to keep inflating so as to help, quote, help England, unquote. In other words, to keep Britain from losing gold to us. So we were on a regular gold standard. Britain was on a phony gold standard. We kept inflating currency and credit and everything else to try to keep this thing afloat. At any rate, during the 1920s, what we've got, getting back to power idea analysis, we have a totally Morgan country. And the administration is totally Morgan, not just Strong. After World War I, this is something which hasn't been really dealt with by most historians. World War I discredited not just internationalism, it discredited American domestic policy because everybody was fed up with inflation and shortages and price controls and all the rest of it which Wilson had imposed. There was a tremendous reaction against the Democrats, and the Republicans get in 1920. Anyway, Wilson was an aberration to begin with because it only came in originally because Teddy Roosevelt was used by the Morgans to split the Republican Party and crush Taft. It was a Rockefeller person. So at any rate, we have a Republican government, a dominant Republican administration in the 20s. Harding was a Rockefeller person largely, although he also had Ohio crooks around him. It's all lovable crooks playing poker all the time. I kind of like that. It's better to play poker than to run, to do a lot of damage. But at any rate, so Harding was sort of a Rockefeller person. Harding then has mysterious illness and dies quickly. Again, there's been no investigation of the death of Warren Harding. No exhumation. I'm in favor of exhuming, by the way. Every president who dies in office should be exhumed and deeply investigated with subpoena power. So a Secret Service guy who was in the Secret Service organization in Harding administration wrote a book claiming Mrs. Harding poisoned him. But that was never, he was considered dismissed as a nut. Well, he might have been a nut, but nobody ever really investigated the charge. I mean, that's very much like the McKinley situation. McKinley was a Rockefeller person. A lone nut kills him. And he's suddenly succeeded by a Morgan person named Teddy Roosevelt. Harding was a Rockefeller person. He's suddenly succeeded by Calvin Coolidge, who was a Morgan person. Now, Calvin Coolidge has been mislabeled by historians as being sort of a quiet jerk type. He he might have been quiet, but he was not just a jerk. He was a member of the Coolidge family, which one of his cousins was T. Jefferson Coolidge, the head of the United Fruit Company. They were in with the whole Boston financial group, the Boston Brahmin group, which was essentially almost completely Morgan-oriented. So Coolidge was a Morgan person. If you read this book by Chernow on the Morgans, you find out that J.P. Morgan Jr. loved Coolidge. He thought that Calvin Coolidge was the greatest statesman of the 20th century. So he loved Coolidge. And so Coolidge's policies were Federal Reserve expansion, keep whipping up the boom, etc. And his cabinet was a Morgan cabinet, more or less completely. And we'll go down the list of that. And then when we get to Herbert Hoover, we have also a Morgan, more or less Morgan. He wasn't as solidly Morgan as Coolidge was, but the Morgans wanted Coolidge to run for a third term. That's what they wanted. They kept urging him. They didn't quite trust Hoover. He was all right, but he didn't. All right. But anyway, they finally settled on Hoover. And Hoover's controls, we say in the espionage business, the person we checked with was Dwight Morrow, a Morgan partner. We checked with 3 times a week on policy and advice, things like that. So anyway, so you have a solidly Morgan. You have Benjamin Strong, you have Coolidge, you have Andrew Mellon, the Secretary of Treasury, who was allied to the Morgans. So we have a solidly Morgan administration. And what happens during the 1920s is other financial groups are going to get kind of bitter. First of all, the Rockefellers are bitter anyway. And they're getting bitter at Morgan domination. The Chicago bankers are bitter, and largely Rockefeller, because of New York Fed domination. So there's a tremendous shift, beginning to be a tremendous shift of financial groups toward the Democrats. In late 1920s, 1928, for example, the DuPonts, who had always been Republican, been protectionists, break with the Republicans and set up the Al Smith campaign. The DuPont executive, John Raskob, was the national chairman of the Al Smith campaign. And they were bitter for various reasons. They were bitter, first of all, because of German chemical patents, which the Germans had, the United States had stolen from the Germans in World War I. I'd say stolen. It's part of the war booty. They had these chemical patents. The United States grabbed them. The question is, who should get them? The Morgans and the Rockefellers wanted to return them to the Germans so they could set the Germans up. Germans would be able to export again and things like that. DuPont wanted to keep the chemical patents. So DuPonts got very bitter about this. They're sort of aced out. Also, DuPonts had a big argument. DuPonts were the major shareholders of General Motors. In collaboration with the Morgans, they had a big falling out in the mid-20s. The Morgans wanted to charge them too high a price for finance and all that sort of stuff. It was a big break with the Morgans. The DuPonts start trying to take over U.S. Steel, which is a big Morgan corporation. And the FTC stops them. The FTC blocks the takeover bid. This is 1926. And because the FTC, of course, was a federal government Morgan-dominated company. So the DuPonts are very bitter. They shift to the Democrats. Also, they hated prohibition, being Catholic, so it was an extra incentive. And by the 1930s, the Rockefellers shift also. First of all, Rockefellers are bitter at Morgan domination, too. The Rockefellers take over the Chase National Bank, which had been a major Morgan bank, seize control of it in 1930. And Winthrop Woolrich, the son of Nelson Woolrich, becomes the chairman of the board. And and the oil industry is in fairly bad shape. They find this tremendous new oil in Texas and Oklahoma. Oil prices are down on the bottom, and they decide in favor of inflation. So what you have now is a general alliance by many business groups in favor of not just cartelism, which they're all now in favor of, but also radical inflation, getting off the gold standard, paper money, devaluing gold, and all the rest of it. The drive for setting up, for getting off the gold standard was head up by the Committee for the Nation, which was set up for that purpose, which had on it retail store people, retail owners who wanted retail people like Remington Rand and Filene and people like that. They thought the consumers should get more purchasing power so they can buy their stuff. So they were in favor of inflation, give more money to consumers. That was their gig. The farmers, of course, always want more inflation. Farmers want to increase farm price supports. And so the farmers were agitating for inflation and paper money. And also the Rockefellers who want a higher price for oil. Well, actually, of course, gasoline is a retail product. So we have the Committee for the Nation was heavily financed by Standard Oil of New Jersey, plus the Royal Dutch Shell Group was agitating for free silver. All these groups got together to get us off the gold standard. When Roosevelt, Roosevelt's famous breakup of the London Economic Conference, I've written on this. I didn't know, by the time I wrote on this, I didn't know about these details, but the key forces behind the scenes. When Roosevelt sent the delegation, the Warburgs, at the London Economic Conference, they were in favor. That was essentially the Morgan Group. They wanted to reestablish not exactly a gold standard, but some kind of a fixed exchange rate with England. England's always their main baby anyway. So they wanted a fixed exchange rate with England, and the superinflationists wanted to cut that out, have all out inflation, and so the Rockefellers and the free silver people induced Roosevelt to send the famous telegram to Moley, or whatever, saying cancel negotiations, we're ending the London Economic Conference. What happens then? The first New Deal, the early New Deal, is essentially the brilliant writings on this by Thomas Ferguson, the New Left political scientist, who's writing a great book which hasn't been published yet, hasn't been finished yet. I'm waiting for great anticipation quarterly. Tentative title is the Fall of the House of Morgan on the Coming of the New Deal. But he interprets, I think, backing. That was the big Morgan thing, to have both together, and was put in by the Rockefellers and other groups who wanted to smash them and cut the tie between commercial investment banking. So that was the big Glass-Steagall Act. And also the Public Utilities Holding Act of 1935 to break up the Morgan-run public utilities companies, the holding companies of public utilities, also successfully accomplished. It was a big smash of the Morgan. It was essentially the crushing of the Morgan oil empire. The guy who succeeded, and also centralizing power in the Washington Fed. The New York Fed was still Morgan-oriented, so they overcome this in the Banking Act of 1935. And coming in as the dynamic New Deal head of the Fed was Mariner Eccles. Mariner Eccles is a Utah banker. And the interesting thing about Eccles, which hasn't been pointed out enough, everybody's praising Eccles for being a pre-Keynesian. There's American Economic Review had an article about 7 years ago saying Eccles is a great guy. He's a pre-Keynesian, not even leading Keynes before Keynes existed or whatever. He's writing stuff about you need deficit spending and more consumption and all the rest of it. He wasn't just that. He was also in favor of everything else, Social Security and unemployment insurance schemes, and going back to World War I collectivism and all the rest of it. It was general all-out status. At any rate, who was he? Again, we look at Eccles. He wasn't just a guy who suddenly pops up from Utah. And he's there from 1934 as head of the Fed until about 1948. So what he was the richest person in Utah. He was the head of a fleet of bank holding companies, and very, very, very opposed to the Morgans because he felt they were antagonistic to him by being able to use the New York Fed as a power center. He wanted to smash the New York Fed on the Morgans, and he was allied with the Rockefellers in doing it. Winthrop Aldrich is also pushing for taking over, smashing the New York Fed. So he was, and also in addition to that, Eccles was connected strongly with Rockefeller interests. He had a Utah construction company, which built the Boulder Dam and lots of other stuff, in a collaboration with the Standard Oil of California, the Bechtel Corporation, which in turn has always been heavily connected with Standard Oil of California and the Rockefeller oil empire. And by the way, when you look at Bechtel, when you look at the fact that the two Reagan administration cabinet members, George Shultz and Caspar Weinberg, were both Bechtel executives, things are coming in. Is this a coincidence? Who is Bechtel? Well, Bechtel is the world's biggest construction company, also very strongly connected and attached to the Rockefeller oil empire. When Rockefeller got the big concession in Saudi Arabia, the oil concession, Bechtel built the bases. You have to build stuff, build pipelines and oil bases and stuff like that. So all these businesses are interconnected. So what you've got then in the first New Deal in particular, we have the more or less smashing of the Morgans, the rise to power of the Rockefeller plus retail interests plus the Loeb and the Harriman. Harriman was a big Democratic contributor, of course, too, and big in the New Deal. And collaboration with, of course, intellectual collectivists. One interesting thing is that the Banking Act of 1935, which centered power on the Federal Reserve and the Federal Reserve Board in Washington, was written both by Eccles and by Lachlan Curry, distinguished quantitativist and money. He was also an economist and also, of course, later turned out to be a Soviet agent. I'm not saying that the Soviet, Moscow and the Kremlin, they told Curry push Federal Reserve Tavares or something like that. But it's going along the same path. It's centralizing power in government in Washington. It's dominating, crippling any kind of free market system. So it all fits into the whole pattern. So now after the war, what happens after the war is over? In general, in this Titanic struggle between the Morgans on one hand and the Harriman, Rockefeller, Kumho on the other, we have a détente, a permanent détente through World War II. World War II was a happy hunting ground for these people. Basically what happened was the Morgan, once again, wanted intervention in Europe. They connected with Britain and France, French finance, Morgan was always out to crush Germany, both in World War I and in World War II. Ideology doesn't seem to make a heck of a lot of difference here. On the other hand, the Rockefellers had no interest in Europe. As a matter of fact, they had cartel arrangements with I.G. Farben, so they were isolationists in the German area and in Europe. On the other hand, they wanted to crush Japan. Japan was evil. They were trying to take over rubber and oil in Southeast Asia, which the Rockefellers wanted. The Rockefellers were very, very interested in crushing Japan, stopping pro-Japanese aggression, unquote. And from 1933 on, and 31 on, I should say. And meantime, the Morgans were sort of isolationists on Japan. As a matter of fact, the one person in the State Department in the 30s who was against war with Japan was Joseph C. Grew, who was the ambassador to Japan. And you look at this, you say, well, Joseph C. Grew, ambassador to Japan, must have been pro-Japanese. That's not really the point. The point is he was not only a Morgan person, he was his cousin was J.P. Morgan Jr. Morgan married into the Grew family, a very close relative. And so is it conspiracy theory to say, well, look, this guy's is a cousin of Morgan. Maybe his policies were also consonant. Is it an accident? His policies go along with the Morgan financial interests. So at any rate, we've got, and by the way, John Foster Dulles, who I already mentioned, was a Rockefeller lawyer for decades. He was an isolationist in World War II. And after the war is over, when the communist problem comes up, he all of a sudden becomes a world global crusader. We have to establish freedom everywhere, to crush aggression everywhere, crush tyranny. How come he shifts so radically from 1940 to 1950? It could have been, of course, an intellectual shift. On the other hand, it seems to be going along with the fact that the Rockefeller interests also shifted from the isolationist to a total global crusading position. At any rate, after World War II, we have a totally different lineup. The lineup is essentially the Rockefellers become the senior partners in the whole. The Rockefellers and Morgans become permanently allied, and the Morgans become junior partners in the Rockefeller Eastern establishment from 1945 or so on. And this is symbolized in many ways. For one thing, the Council of Foreign Relations, which was set up by the Morgans after World War I to push internationalism and foreign loans and all the rest of it, was taken over by the Rockefellers after World War II, and sort of a friendly takeover. It was not a hostile takeover. And the oil becomes the dominant situation in general, and the Rockefellers take a senior post in the so-called Eastern establishment. So from then on, the heads of the Fed doesn't make much difference to Morgan and Rockefeller. Although it's interesting to sort of cite it. The first guy is Thomas McCabe. After Eccles leaves, Truman had a brush with Truman. Thomas McCabe becomes head of the Fed for a few years. He was the head of Scott Paper Company, which is allied with the Morgan interests. After that, William McChesney Martin, a much beloved figure, becomes head of the Fed. William McChesney Martin Jr. came from St. Louis. I think the key thing is his father-in-law, Dwight Davis, who was the Secretary of War under Coolidge, was tied in with the Morgan interests. And after Martin, we have, of course, the beloved Paul Volcker, who was lionized by everybody, the press, the media, the academics, everybody else. He was 6'6", and he had a smoke a cigar as a charismatic figure. I don't think that was the reason he was lionized. It was lionized because of the fact he was who he was. In other words, chairman of the Fed. He was also, of course, long time connected with the Rockefeller Royal Empire. He was economist for the Chase Manhattan National Bank. He was then Manhattan Bank. He was economist before that for Exxon Corporation, et cetera, et cetera. His whole life was in the Rockefeller ambit. Alan Greenspan, by the way, in addition to being an alleged ex-Randian, Alan Greenspan was also, before he became head of the Fed, was on the board of directors of Morgan Guaranty Trust Company, a big Morgan bank. He was also, of course, connected with the Trilateral Commission, which should be mentioned here as a post. Council of Foreign Relations was getting kind of unwieldy. So David Rockefeller set up the Trilateral Commission in the early 70s. It was a very small group, I think 75 people in the United States, something like that, to sort of plan the world economic scene and all that sort of stuff, make suggestions. By the way, I should say this also, that during what happens in Bretton Woods, for example, was set up, the whole Bretton Woods system was planned ahead of time during World War II by a secret group of headed by the Council of Foreign Relations. The Morgan people began to work their way back by late 30s and early 40s. For one reason, Norman Davis, who was head of the CFR, was a Morgan person, was also a close buddy of Franklin Roosevelt. So they had a personal relation. Anyway, they worked their way back and they planned the post-war world, both the containment policy in Cold War and also the economic policy of Bretton Woods and the World Bank and all the rest of it. And the two Americans who were planning it for the CFR were Jacob Viner and Alvin Hansen. supposedly two opposite ends of the spectrum. Jekyll Island being a alleged right-winger and Hansen being a leftist. Actually, they're very close. They're very close. I mean, it's sort of like it's like right-left on Crossfire after Pat Buchanan's left. I mean, it's more or less the same thing. Very nuanced difference between the so-called right and the so-called left. It's all very respectable center. And so what you've got is an agreement on essentially a Keynesian post-war setup, and just minor differences in how to, they're negotiating with Keynes himself, and Keynes wanted more stuff with Britain, and all that sort of, it's all very minor negotiation. Everybody's very happy with the post-war monetary picture, where essentially the English system comes back with the dollar being a phony gold standard instead of the British pound. So, and as I say, with the power elite, we essentially have Rockefeller domination largely with the Morgans as junior partner. What's happened in post-World War II America is basically there's always competition, both in economics and politics. And the Eastern establishment has been challenged by sort of maverick types from 1950s on, maverick types mostly from either Texas or Southern California or Florida. In other words, the Sun Belt. New self-made millionaires will pop up, sort of throw a monkey wrench into the system. And they've been called the Cowboys. There's a great book, the libertarian reporter, historian type, Carl Oglesby, wrote a great book called The Yankee-Cowboy War, which integrates explanation of Watergate, of all these political things since World War II, Watergate and the Kennedy assassination, all in one very interesting package. At any rate, essentially he looks at, I think it's a very interesting way to look at it. He looks at, for example, the Kennedy assassination is basically a coup by the Cowboys to take power against the Yankees. Kennedy, of course, being a quintessential Yankee, and Lyndon Johnson being a quintessential Cowboy. And once again, a lone nut pops up, and suddenly there's a change, and fundamental change in power elite rule. And then he interprets Watergate as a counterattack by the Eastern establishment, using not violence, but the media, it's respectable media, CBS, Washington Post, New York Times, that sort of stuff, using control of public opinion to oust Nixon, who was, of course, basically a cowboy type coming from Southern California. It's a very interesting kind of way of looking at it, because then you don't look at Republican versus Democrats so much. You look at who's the financial group here, what's going on, who are the power elite forces at work. And, of course, we need more analysis of this. We need more scholars. One of the problems in this whole field is, since the field is not considered respectable, the field of power elite analysis, Orthodox historians don't mostly work at it. Academic types don't work at it. It's more easier to talk about, every battle of the Civil War in great detail and talk about the Morgan Rockefeller combine. And so what you get is it leaves the field of analyzing this stuff to sort of more marginal types, independent scholars or reporters and things like that, who might make more mistakes, and of course they get jumped on, discrediting the whole approach. That's one of the problems in this whole area. It tends to be a self-fulfilling prophecy. Well, this guy's made mistakes. But all fields make mistakes. That's the pioneering having any kind of new discipline. This basically is. So anyway, that's this all comes from looking at what these guys were doing before they got into office and after they got out of office. And I think that's the kind of insight you get when you're looking at what this guy did throughout his life. And as John Foster Dulles or any of these people, Mara Eccles or any of these people, so it gives you a totally new perspective. And it needs to be brought out and discussed in the scholarship. It almost is never done that way. And so that's, I think, I'm going to throw open to you. This is a new way, another way of looking at the Fed. It's not just people doing things. Everybody admits the Fed is sort of screwed up, or they made errors and things like that. But maybe the errors are also systemically related to who's doing it and why they're doing it. Maybe it's not so much an error from their point of view. It might be perfectly rational from the point of view of the forces that are operating it. It's like the farm policy, agricultural policy. If you look at agricultural policy, and I'll leave you with that. If you look at the farm policy since the New Deal, it's actually since 1928 when Hoover started it. You look at the farm policy, 1929, Hoover started it. You look at the farm policy, it looks irrational. Many economists say it's irrational. Why is it irrational? Look, first you pay the farmers not to grow stuff. You pay them to grow less. You pay them not to grow food. And then, that's one thing, and then you also pay them, another division of the Department of Agriculture, pays them to grow more food, to irrigate, and to have more fertilizer and rural electrification, all the rest of it. So it increases their production. On the one hand, the federal government increases their production. On the other hand, the federal government pays them to cut production. It seems irrational. It's irrational from our point of view. It's not irrational from the point of view of two groups. One, the Department of Agriculture, more and more bureaucrats. And to the farmers, they get paid both ways. They get paid for producing more, they get paid for producing less. That's great. Those who are still left in there, the large farmers, will benefit from it. So irrationality is only depends on which point of view you're talking about. The point of view, of course, the economy or the standard of living, of course, is irrational. The point of view of the forces at work, it isn't. I think, by the way, it's important in general, just to leave you with this thought. You know, when we argue for the free market, we tend to look at it as intellectual error, which of course it is. Socialism and statism are intellectual errors. And they're wrong, and they lead to also terrible consequences and all the rest of it. There's something else involved, namely economic interest. Many of these guys benefit from these policies. They're for it because they benefit from it. If you look, for example, when I was growing up and entering the field, the free market field, you look at Nelson Rockefeller, the Rockefeller family, status to the hilt. And the usual explanation was why they status. The usual explanation is why they were brainwashed by left-wing professors or left-wing prep school teachers. That's one way to look at it. The other way to look at it is maybe they're benefiting from it. Maybe that's why they're for it. Maybe it's a tie-in. Maybe they're not so crazy. Maybe it isn't brainwashing. Maybe it's perfectly, if you're immoral, setting aside morality, they sort of disappeared anyway, but benefiting from their point of view. So I think this needs deep investigation. Thank you very much.